Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to In the City. Now, each week we unpack a story that's crucial to the world's financial capitals. I'm Francine Lacqua. And this week we're recording a show from the 5th edition of the Qatar Economic Forum in Doha. So it only seems appropriate to zero in on this massive wave of deal-making emerging from the Middle East. Now, following President Trump's recent high-profile visit to the region, the White House claims that Saudi Arabia, Qatar, and the United Arab Emirates have made over $1 trillion in new economic commitments. Now, these deals, of course, span a range of key sectors: defense, aviation, artificial intelligence, really signaling this major push towards strategic partnerships and long-term diversification. Now, in this episode, we'll take the pulse of the forum. You can see it's very noisy as people also talk around me. We explore how business leaders are reacting to the latest deals and what it could mean for the region's investment landscape going forward. Well, to unpack all of this, and there's a lot to unpack, I'm delighted to be joined by Matthew Martin, Bloomberg's chief correspondent for MENA Sovereign Wealth Funds, and Dinesh Nair, Bloomberg's chief correspondent for global deals.
Welcome to the City of London.
The City of London.
The next station is Bank. Please mind the gap between the train and the platform.
The financial heart of the country.
The City.
The City.
Welcome to In the City.
Stand clear of the doors, please.
So good to have you on the podcast. We can hear each other, but the buzz is incredible actually here at the Qatar Economic Forum.
Yes, it is. And it's great to see so many people lining up in Doha. More than 2,500 delegates. It's a lot of excitement, a lot of vibe in the region, which is what you kind of see whenever you come to the Middle East. In the last few years, that's been the big change. Yeah.
But then with President Trump, Matthew, actually showing up last week, I mean, it's incredible. People talk about deals, right? Is this real money? Is this real deals? Or is this, more terms of understanding? It's like, yeah, we'll work on it. We'll work on AI. Or is this region going to get a lot of flows quite quickly?
Well, I think I was at the Trump's visit to Riyadh last week, and there was a whole host of numbers that were being thrown out by people. Initially they said that there was $600 billion of investments. Then it was announced from the stage there was $300 billion. Then the Crown Prince and President Trump as well said that there was a plan to get to $1 trillion. So, where this number actually is going to end up, I think, it's going to be anyone's guess over the next few years. But I think what's clear is there is this very real change in mood between the region and the US. Relations under the Biden administration were strained at times. The region was sort of flirting with China and boosting trade and investment flows with China. Now I think that, following Trump's visit, it's really sort of said that, this money, they want it to be flowing into the US. They really value that partnership, and particularly around those things you mentioned, like diversifying the economy, going into technology and defense. All these areas are definitely going to be sucking up a huge amount of capital out of this region.
And Dinesh, I mean, they all need money, right? So it's basically, the GCC countries, Qatar is saying, we have money, but we'd probably like it to be more invested in the region rather than going abroad. But the US also trying to attract funds. So it's like they're friendly but competing.
Yes, it is. And it's actually quite an exciting, interesting mix of the needs of different countries. If you look at Saudi Arabia, for instance, they need a lot of capital in the country. They're going through a big infrastructure spending boom. They're creating big cities, as we know, from scratch. So there's a lot of money required in the country itself. So the number which has been put out has raised some question marks on where is that money going to come from, because you're spending so much in your domestic economy. I think Qatar and UAE are a bit different. If you look at UAE, for instance, the infrastructure is already in place, and their big ambition is to diversify the economy, and so they have a huge requirement, to get access into chips and also build out their artificial intelligence industry. In Qatar, even it remains similar. They're going to get huge inflows in the next couple of years, from the LNG exports. And it's a small country, so where do you deploy that? And US becomes a natural home for them. So I think the dynamics are a bit mixed for different countries here.
And Matthew, I've been thinking about this a lot because it feels like, you have a president of the United States that wants to do deals. So this is not only about money, this is almost like a strategic geopolitical alliance. So how much were the deals announced in the region last week about keeping President Trump on side, and how much of it is actually just deploying capital and putting it to work?
There's clearly a very real part of this, and the sort of announcement inflation that you saw of each of the countries that he visited around the region wanting to one-up the previous one and announce more and more. I think a lot of that is about, understanding a very transactional U.S. administration and knowing that they can play that game to their advantage, because they often have these big sovereign wealth funds that can deploy capital and can make these big long-term commitments. So some of that is going to be a bit nebulous and is possibly not going to see the light of day. But I think as well they see that diversifying their economies, they see that building an AI industry, becoming hubs for these sorts of things, you have to partner with the US for it. And as much as there has been all the noise around sort of DeepSeek and how much that sort of changes the equation around AI investments, ultimately, I think everybody sees the future of AI as coming out of the US, and so that's where they want to build those partnerships. And also, linking into that, the region has been very keen on getting defense agreements and security pacts with the US, and so buying a lot of American hardware helps knit them into that American defense complex to set the ground for trying to do those broader geopolitical deals over the course of this administration, which I think is going to be one of the big goals.
But also, if you look at some of the biggest sovereign wealth funds in the world, they sit in this region, and this is because of the revenue from oil and gas, which will probably only increase. We heard also here from Qatar that will increase. We spoke to the Kuwaiti Sovereign Wealth Fund. How much more money will they have to put to work in the coming years thanks to revenue?
Yeah, I think, I know Dinesh was hinting at this a bit earlier on, and we had a story the other week that Saudi Arabia's got about $2 trillion worth of domestic commitments that it's on the hook for. They can space some of that out maybe, but clearly the big push within Saudi Arabia is going to be domestic investments. And so the amount of capital that can go outside of the country is going to be more limited compared to a place like Doha, where they've got these big gas fields coming on stream in the sort of year or two ahead. That's going to be giving the QIA this massive new war chest that they're going to have to deploy. And, they're talking about a $500 billion commitment into the US over the course of the next 5 years or so. And that probably has some sense of reality to it. They are going to be having to digest more and more capital coming into the fund. And the US is going to be a great place to try and digest some of that. Similarly, in Kuwait as well, we had the head of the KIA on the stage earlier on today. He was talking. He was less effusive about making big commitments and pledges to the US, but he was clearly saying that you are underweight the US at your peril. And so, this is a sign that, I think both of these funds and also Abu Dhabi as well are going to be continuing to look to put lots and lots of money at work into the US.
Yeah, how do they put that capital actually to work? And again, in the US, given the volatility that we've seen, and the valuations that have been frankly all over the place, what is there a natural home for this capital to end up in the US?
So I think a lot of them actually put money into public equities, and I would think that will continue. So if you think about Qatar, for instance, saying $500 billion of commitments over the next 10 years, that's $50 billion on average every year. And if you buy the S&P, some of the biggest companies, you can deploy quite few billion dollars into that. That will continue, but I think they're also looking at into the AI infrastructure space. A lot of them are interested in healthcare, so that's a big sector that they're focused on, is to understand, and develop their own industry back home. You need to kind of invest in that sector. So there's quite a lot of money going to that. Power is a big space because it's obviously powering. You need electricity to kind of meet the AI demand. So there's quite a few areas they would invest in. But if you think about someone like a QIA, or for instance a Mubadala, you'll see potentially expect a bit more direct investments, which they've not been doing in the past. So I think that would go up a little bit. And then, the normal course of business, investing in the treasuries and public equities, which they've been doing for a few years, that will continue as well. But still a big number. I think for me, what is kind of interesting is that if they're all chasing the same assets from the same region, trying to kind of lobby the same person in the administration, do they end up paying a little bit more? Is there going to be competition from this region for the same assets? That's something which will be interesting to watch in the coming years.
I mean, it's interesting because there's also a new head of the QIA that's much more familiar actually with US equities. So I wonder whether that changes the investment profile of the sovereign wealth fund?
Yeah, look, I think clearly from the comments about the commitments that they're willing to make into the US, and a lot of the talk around the event today has been very. There's been a very America First agenda, I think, among a lot of the panelists, and I think if you look at the QIA, they're clearly buying into a lot of that Trumponomics. Looking at investing not just into some of these things, the stuff we talked about around AI and those sorts of technology and the sort of the future industries. They're also talking about investing into the reindustrialization of the US, which is that whole Trump goal of bringing manufacturing and bringing those jobs back into the US and bringing the supply chain for American goods back into America. So they sound very optimistic about wanting to play that trade as well, which is something that people have had some concerns about how realistic that might be. But yeah, I think the fact that the head of the QIA now had spent years and years running the US means he's obviously very familiar with the economy, very familiar with the investment scene there and all the people that he needs to be in contact with. And so I think that's why they're making this decision, that they are going to be that they're going to be very, very supportive of the Trump administration's goals over these 4 years.
Dinesh, how do you see this ending up? Again, if you look at equity, there's a lot of talk about private credit, private equity. Is there already, it's early days. Again, Trump just left the region like 4 days ago, but is there an indication of them going more into alternatives?
There's clearly a push for alternatives, though some people, especially they had the QIS here who kind of mentioned that private credit seems a little bit crowded now. But clearly there's a lot of push towards private equity. So traditionally how these funds have invested in private equity was either through investing in the funds itself or partnering with some of the large private equity firms who are looking to commit capital into buying business in the US. And they would come in as a minority investor. And that they've been doing for a while because they're also like the biggest LPs to some of these funds. They've also always got like a bit of preferential access. They get co-investment opportunities. They're the first ones to see these deals. And in a world where there's not so much money floating around, the Middle East as an LP base over the years has become very important for the private equity firms. So it's not a market they can ignore. That's why we're seeing a lot of private equity firms announcing that they're setting up shop in Abu Dhabi or in Qatar or in Riyadh. That's because they understand that the money for some of those big investments, they need the equity check is coming from this region. So I think that would continue to improve. There are only few of them. I don't think a lot of them are keen on buying majority stakes and owning businesses outright because they just don't have the manpower and the operational capabilities to run businesses per se. But they do get 20% stake in a big business and they get a say in that, they get a board seat. That's how I think the alternative push is going to go into it. Plus, there's also like, if you look at someone like an Adia, there is a push to do investments more into hedge funds. We understand they're looking at a lot of money into different strategies. So that will continue as well.
Infrastructure, AI, sports. I guess there's still a big push also because of the young population here to own sports teams. Is it football or it could also be others?
Yeah, I think we're going to see sports continue to be a big theme across the region. I think sports has been emerging much more as a sort of investable asset class over the last few years than it has been in the past. Obviously, the PIF's investment and creation of LIV and their sort of plan, maybe if they can get a deal done to merge with the PGA, that's another big push by the PIF to get into the US sports scene. And there's sort of talk around changing some of the rules around ownership of American sports teams, which opens up the door to these sort of private equity players. And I think one of the things that we've heard from some of the sessions today is that the sovereigns out of the region can afford to be patient and they can afford to take some time investing in these things which maybe don't return a huge amount of money in a typical sort of 3 to 5 year private equity period. But if you look at that longer sort of 10, 15 years, then they can be really, they can be both financially viable and they play this great role for promoting the region and promoting the region as a place to invest, a place to holiday, a place to visit, promote that sort of understanding as well, and those sort of soft power links, which is increasingly a role that the sovereigns out of the region are playing. They used to be 15, 20 years ago, the sovereign funds were all saying, look, we're not political actors. We're purely investing for financial returns. And now, I don't think anybody bothers making that argument. I think clearly they are they are playing a role in statecraft and a role in soft power projection.
But which is also why we saw a lot of the trophy assets, right? Be it like Harrods or PSG or some of these big brands that was cool to own if you have a lot of money, because like you're the new kid in town. It's like suddenly you have a brand that everybody recognizes and either just like staying there or shopping there or watching. Will that continue?
Yeah, look, I think so. If you look at the sort of Oscar Wilde quote of, the only thing worse than being talked about is not being talked about. And so, I think that's part...
Unless you're followed by Dinesh.
And that's part of sort of inserting themselves into the conversation. And things like, Harrods and things like, all the money that gets poured into hosting sporting events in the region, it makes you part of the conversation. Nobody has written more about Saudi Arabia since these Live Golf and the investments into the Premier League and into bringing Premier League players to Saudi Arabia. I think that's all part of elevating the role and the knowledge of these countries are all around the world.
Yeah, sports is soft power, as Matt mentioned, and that's been a big factor for buying into some of this. It's not just the financial returns. Increasingly we see these funds trying to buy influence as well as, when they buy assets, it's also like what kind of influence that can get in a certain administration or a certain region. So there's a bit of that thinking going behind, and the fact that they can own some of these assets for longer periods of time, compared with the private equity firm, gives them the ability to kind of withstand losses, through cycles. So that's another advantage they have. So I think we'll continue to see sports investments. We saw a period when QIA kind of stepped away from making these, trophy asset investments and kind of went into a lot more venture capital investment, early tech investments. But we kind of think like with the more inflows coming in over the last 2 years, so we'll kind of see bigger deals. And it has to be like some of the big assets, that become trophy assets. So maybe continue to see that as well.
I mean, there was a wave where there was a lot more scrutiny, right? And that's come and gone about some of the money from certain parts of the world going, for example, to London, to New York. Where are we on that?
I think there was some reports about some of these investments which was promised to the Trump administration, and there's some eyebrows being raised in the US about what does this mean for some of our core assets. Are we giving too much access to Middle Eastern investors? So that there will be that scrutiny. It doesn't go away. But I think when you have an administration on your side and when you have someone who is so transactional and who wants to kind of see investments being made into the country, I think there is a bit of leeway in that. I don't think so. During the Biden administration, CFIUS was a big concern for these funds. Like they were lobbying to try and see how can we get access to U.S. assets without CFIUS blocking some of these deals. And overall, it seems like the regulatory environment in the U.S. is a bit more friendly now. So I guess it's less of a concern now. But these things always come and go. Yeah.
Yeah, and Matthew, also the way for even Qatar, but other countries in the region straddle, I guess, a friendliness with the U.S. in terms of investments, but also with China. At some point, do they have to choose? Or are they being asked to choose between the two if they're the two biggest rivals on Earth?
Look, I think under the Biden administration, certainly the rhetoric then was that I think the region was being asked to choose. And without dangling the carrot in front of them as to why they should be choosing the US, I think there was much more openness to engage with China. China is the biggest trading partner purely because of oil and how much China is buying from this region. So, the Gulf states have to do something with China. I think, the US would like to see that limited, though. I think the challenge is going to be after the last couple of days, we've seen these ginormous US investment pledges, and we sort of talked a bit earlier about the fact that there's a lot of skepticism about how real some of that is. I think the question is going to be, in 5-10 years' time, how much have we seen those turn into real investments, and how much do we see that ultimately a lot of Chinese companies have come in and swamped the market quietly without these big headlines and without these ginormous state visits, and they just quietly come in and gobble up the market. And I think that's something that, we're going to have to watch over the next few years.
Yeah, I agree with that. I think they will choose the US and they will invest with China without making headlines. So it's kind of a way where the headline-grabbing announcements won't be with Chinese companies. But if you look at this region, where does Aramco sell most of its oil to? It's to Asia. Where does Qatar sell most of the gas routes to China? So they're the biggest market. It's very hard for them to ignore it. And we're seeing a lot of Chinese investment come into the region, and they're very serious about it. But it just won't be at the like the headline-grabbing investments that we see to the U.S.
Yeah, and I understand to Matthew's point, but let's say even 20 or 30% of what was announced, it becomes real money. And it's a lot. It's a lot of cash. It's a lot of investments to be deployed. Are those deals that have been taken away from the UK and Europe? Because there's not an infinite amount of capital. So is the money being used here, could it have been used elsewhere?
I think in a way Europe has had in the last few years kind of lost those investments. There is a feeling today that Europe is cheap, so I would expect some money to go into the US. It was interesting, the governor of PIF made a commitment to invest more money to to Europe. Haven't seen that in a long while, but it would be, you can also argue that there'll be money going to India, a bit going to Indonesia as well. I don't think Europe will be at the top of the list, so they definitely seem to be missing out on some of these opportunities.
Dinesh and Matthew, thank you so much for joining us. Well, thanks for listening to this week's In the City from Bloomberg. This episode was hosted by me, Francine Lacqua, in Qatar. It was produced by Summer Sadi, Moses Andam, and Tala Ahmadi. Brendan Francis Munam is our executive producer. Special thanks to Dinesh Nair and Matthew Martin. Please subscribe, rate, and review wherever you listen to podcasts.